7,000 we said is the total auto capex over the 3 years, and 5,000 was for the farm equipment business. Out of that, 12,000 crores was for the electric SUV portfolio. We believe that, we as a leading auto OEM in the country and, with global aspirations as well, need to make the right investments to create future-ready product portfolios. And we've been working on that over the last couple of years. A key part of that is creating a new in-glow platform, which is a born electric platform. We have showcased some of the products that we will bring out through 2025, 26. And we believe that, as a leader in the SUV space, really, we would want to play a critical role in growing the electric vehicle category. Categories grow when you have exciting products. We've demonstrated that on the ICE SUV side. We believe that our exciting product offerings is what has been the key driver for us to gain volume, gain market share in this segment. We will be hoping and aiming to do the same with our born electric EV portfolio. We would start launching products in a calibrated way starting in the Q1 of calendar 2025. The products really do have standout design. They're going to be very high on tech and software and are really fun to drive. The electric is quiet and they have excellent acceleration and pep. So we remain very excited about the opportunity. You also spoke about, the EV penetration in India with, as compared to around the world. In India, it's at a very, very nascent stage. Countries around the world are seeing some kind of slowdown after they've crossed 15-20% penetration. We are at 2% penetration. So there's enough of an upside. We believe that by 2027, 20 to 30% of our portfolio will be electric in the SUVs. Given that the balance 70% or 80% will still be ICE, we continue to invest in exciting ICE products because that will still 3 years from now be a critical part of our portfolio. So in a way, we would have a very strong ICE and EV portfolio 3 years from now.
But Mr. Jejurikar, will there be any cannibalization, sort of EV eating into ICE as the new launches roll out? I mean, that's a little natural to expect, right? How do you see both playing out starting that first quarter of next calendar year when we get the EV launches from M&M?
Yeah, so of course there will be some cannibalization. I mean, we don't rule that out at all. And that's something we're comfortable with. As we've shared, not necessarily at the date of launch, but as we have on our ICE product portfolio, we do build margins incrementally as we build volumes. We would expect on a steady state basis, the margin per unit of ICE and the margin per unit of electric vehicles would be the same. Now, not as a percentage because there is a denominator effect, but as a per unit margin, they would, on a steady state basis, like to be comparable. In which case, we won't worry about cannibalization. We give customers the choice. And one of the reasons we've decided to sell both ICE and electric from the same dealerships in the same showrooms is to give customers the choice of whether they want to buy our ICE portfolio or our EV portfolio. And customers will choose based on their needs. A lot of our customers are multi-car owners, don't hence have to worry so much about range anxiety, have charging infra at home and in office. And of course, the new portfolio has a very, very good range as well.
All right, Rajesh, appreciate you joining in and giving us clarity on the SUV part of the business, the tractors, as well as some color on the EV business. Wishing you all the best for FY25. FY24 has been a star, as the stock price is telling us. Well, for the time being, though, we'll have to slip into a short break. You come back, we'll get chatting with the management of Concor. Don't go anywhere. Welcome back. This is Corporate Radar. Well, as promised, let's get straight to Concor's Q4 numbers. He reported a mixed set. The volumes came in better than realizations. Their margins also improved. Mr. Sanjay Swarup, the chairman and MD of the company, joins us on the show. Good morning, Mr. Swarup, and thanks a lot for joining in. Well, for the past year, your volume growth was around 8% odd. Earlier on, there was some kind of skimming down of guidance. But that's about the past year. Going ahead for FY25, what kind of a volume growth can you guide us? And if you could break it up for us between EXIM and domestic.
Yeah, good morning. We are expecting a very good growth in this FY25. In EXIM, we are expecting around 15% growth. And in domestic, the growth will be around 25%. So overall, we are expecting a growth of 18 to 20% in this financial year 25.
Right, got that. So, hi, good morning. Prashant this side. Mr. Swarup, how were realizations in the fourth quarter in both export and domestic versus last year?
Yeah, realization have seen a good growth in this fourth quarter as compared to the Q4 of FY23. And we are seeing a good margins and good top line growth. In fact, the Q4 of this financial year has been the ever highest in the company's history. And it was the Q4 of 23, which was ever highest. Now we have broken that record. And we have posted a highest top line in this FY24 Q4.
Mr. Swarup, I wanted to understand